Good morning. Welcome to IG's early morning call. It's Thursday, the 7th of March. Let's take a look at the headlines as we await on day two on Jerome Powell's testimony to Capitol Hill. Yesterday, it saw the dollar trade down near 1 month lows on increased prospects of an interest rate cut coming through from the US Federal Reserve. Which way that finally goes depends on which date people are going to be choosing, looking as though it could well be June. And then it's a question of how many more rate cuts we could well see for 2024. As a result of all this, it's pushed gold up to another new all-time record high. ECB interest rate decision is the next big pivot point, I think, for today's session. No change expected, but could we see some more commentary about the need for more evidence that inflation is on its way down before the European Central Bank does cut interest rates? Could it be June as well that we could well see the ECB start to move lower? And equity markets on the session today, mixed start expected at the top of the hour. I'm not really getting much movement on the markets on the IG platform as we await that ECB interest rate decision, but we do have a whole long list of earnings. Aviva, ITV, Page Group, a number of companies on full year earnings out this morning. And in the US, we're looking at later on today for Gap, Costco Wholesale. There's also been a merger this morning. Breaking news headlines is that there's an agreement between the Nationwide Building Society and Virgin Money for Virgin Money to be acquired at 220 pence a share. Well, let's take a look at what's happening in volatility. It's up today again, which to me means that there's people looking to try and shed some risk. Yesterday, look at the size of the candle on yesterday's candle, on the candle chart here for the daily candles. A big upside there showed that the buyers were out in full flux on the session yesterday, and then came the late traded sell-off, taking us down pretty much to where we started. We've got a red candle at the moment at 76.44. As I said, markets really undecided which direction to move in. A number of companies reporting earnings this morning. German DAX now firmly on the way down. We're pretty much at the bottom of the candle. No buyers in the market at 17,650. So looking ahead to the ECB interest rate decision across the Eurozone, looking for some negativity. Ditto the French markets down at 79.17, lower than the lowest point we were at in yesterday's session. So that gives you a flavour of what's happening now at the moment there. Not much move for London markets, but we're on the way down at the moment, looking for a lower start, certainly in Germany and France at the top of the hour. Let's look at what's been happening in the Asia-Pacific markets, where we're seeing the Nikkei down 1.25%. Same sort of price action on the Hang Seng Stock Index, S&P ASX 200 benefiting from some of the rises in metals prices, some of the commodities up in the session in today's trade. We're up around about 0.4% at the close. Wall Street close yesterday was an interesting move that we saw. When all was said and done, we saw gains across the markets. So you remember this time yesterday, we were talking about the biggest declines coming through in tech stocks. It was the biggest gains yesterday, up almost 0.2% for the NASDAQ composite. As I said, a number of companies reporting earnings today, which I'll go into a little bit later on, none of which are all sessions on the IG platform. Look at the price action here. An interesting drop here on the markets over the last few days. This is the NASDAQ down at 17,924. And so far as the S&P 500 is concerned, same sort of thing, a pullback from the recent highs that we've seen. It's all today about this Jerome Powell testimony. It's day two of the declaration to US legislators. Let's take a look at the damage that was done yesterday to the dollar basket. Big move lower yesterday, down below the 200-day moving average, down below the 50-period moving average, and we got another drop today at 102.88. While the Fed chairman confirmed the US economy appears nowhere near the point of falling into recession, he noted it remains unclear when the central bank may cut interest rates and just how many interest rate cuts there are due to be undertaken this year. Powell told the members of the House Financial Services Committee that the Fed was on a good path to achieve its hoped-for soft landing. Today, as I say, is day two of that declaration. Now, the move that we saw down in the dollar yesterday has seen a commensurate move up in gold. Now, gold storming past this red line, which is the previous record high we saw back on the 4th of December at 21.21, 21.58. Where we go from here, it's very difficult to assess. Technical analysts will tell you there are projections that you can get Fibonacci extensions on from where we are when we pass this. You'll have to look into more detail about how to use those. And indeed, if you'd like to know more about Fib extensions, get onto your client manager at at IG and be able to help you through talking about that, and indeed who to talk to about where gold is likely to go and some of the big price rises. 2200 is the next round number up here, which would give us a little bit more meat still on the way up if we were to go to that next big round number. Meanwhile, we've got the European Central Bank out today. Last week, the ECB President Christine Lagarde suggested that while slowing inflation would persist, there was more evidence needed before the price increases will return the ECB inflation target down to 2%. Banks expected to keep its main refi rate unchanged at 4.5%. The deposit facility rate and the marginal lending rate are also forecast to stay unchanged at 4 and 4.75% respectively. And of course, the big trade around this will obviously be around what's happening on the equity markets, but I also want to take a look at the euro-dollar trade. And the euro-dollar benefiting from that drop in the US dollar yesterday on day one of the Fed chief's testimony to Capitol Hill. 108.96 is who we're trading there at the moment. If you were long on this, we were talking about this yesterday, your stop now goes below the 108.50 level, with a view to taking the euro up further if we get further negativity for the US dollar. But I think it's all about what happens in terms of the commentary around the European Central Bank. Recent inflation data last week showing inflation fell in major European economies, France, Germany and Spain, while the Eurozone's preliminary inflation data for February dropped to 2.6% from 3.8% the prior month. I'm wondering whether perhaps maybe we could well get the best indication we can possibly expect from the ECB today to suggest that interest rates could start to come down come June this year. So that's looking into the crystal ball. Let's take a look now at what we've seen in terms of some of the economic data out today in Australia. Trade surplus increased to 11.03 billion Aussie dollars in January, down from a downward revised 10.47 billion in December. Exports rising faster than imports. Shipments grew by 1.6% from this time last month. Meanwhile, same sort of data out in China. The trade surplus there widening as well, with the same sort of dynamic going on. The widening to $125.16 billion in January. February exports growing, beating forecasts of 1.9%. We saw them up 7.1%. So really good data, strong data in China. Part of that big widening of the surplus coming through because imports climbed only 3.5%. Looking at what's happening with the dollar traded against the Chinese yuan, I was talking about this in the last few days, this symmetrical triangle, which continues to trade. We're looking there for a breakout 11th or 12th of March or so. Whenever that happens, you measure the height of the symmetrical triangle, and then you give yourself a projection. Just to indicate what I mean, there's the height there, and that would be your copied line. You either get a line which rises to there, or you would get a pullback, and you would see a drop down to that area, sort of down there, and that's how you measure the movement. It's waiting a breakout on the upside or upside. It's a symmetrical triangle, so we go equally one way or the other, waiting for that breakout. Now, let's take a look as well at what's been happening in some of the areas of the market. I think we might have some details about what's happening with the Halifax Building Society. We've just got some breaking news coming through on there. Halifax House Price Index rising 0.4% in February month on month after a 1.2% rise in January. You remember that the Nationwide just last week saying that house prices rising year on year at the fastest they've been at since January 2023. So this is possibly going to be a little bit of a disappointment. The previous number for the Halifax was 2.3% year on year, up just 1.7%. It is a gain, which is good, but part of that is because of the fact that we're just not building enough houses, just not having enough houses on the market, and not enough people are wanting to sell because of the high cost in moving. So there's not enough properties coming onto the market, which is part of this issue about the fact it's keeping prices up. Later on today, we get some US economic data out, market awaiting US balance for the month of January, and also the weekly jobless claim. So you can see there we do still have some economic data out later on today in the States to watch out for. But I think the big swing point is likely to be what's happening with day two, Jerome Powell's testimony. Now, let's take a look at a deal that's just breaking in the last half hour. We've been hearing about the Nationwide ambitions to take over Virgin Money. There's been a preliminary agreement between the two for that takeover to happen. I want to show you the share price chart of Virgin Money. Virgin Money has been trading just below that 160 level for a while. The deal is for a 220 pence agreement. The Nationwide will pay 218 pence per Virgin Money share to investors, plus a dividend of 2 pence per Virgin Money share, giving a total of 220, which is a 38% premium to the closing price yesterday, just below 159 pence. So that's a deal that could see some upside there, or indeed will see some upside for this stock when trade gets underway a little bit later on. Meanwhile, some earnings out today. Let's quickly run through some of the numbers we've seen. One of the UK's largest insurance company, Aviva, has come through with full year numbers. Operating profit up 9% to 1.46 billion. Net income, 1.47 billion. Net income, 1.1 billion. Cash remittances of 1.8 billion, up 3%. General insurance premiums up 13%. Now you know why things like car insurance, house insurance have risen so much, because insurance companies have been putting up the premiums. Baseline controllable costs down 1%. Final dividend up 8%. So investors have been rewarded for this increased amount of money coming through the books. For Aviva, whether or not we're going to get a rise at the start today remains to be seen. But if you look at the share price chart, yesterday we hit intraday levels not seen since the 13th of March last year. So has all the upside already been done for these numbers? Possibly. We may see no move at the start of today's session. We'll have to see at the top of the hour. Meanwhile, we've got full year numbers out from ITV, another company worth looking at the start today. Total revenues down 2%. Operating profit, £238 million. EBIT margin of 13%. But EBITDA down 32 at 489 million. In line with ITV's dividend policy, according to the statement this morning, the board has declared a final dividend of 3.3 pence, which is no change on this time last year. Back on the 1st of March 2024, the company announced that deal to exit all of its interests in BritBox. Well, that had an interesting effect on its shares. If we look at what's happening with the share price moves, that was last Friday on that news, where we see a 12% gain, I think it was, in shares of ITV as a result of that deal. Since then, we've seen a little bit of money taken off the table. The board intends to return the entire net proceeds of that deal to shareholders through a £235 million share buyback, which is expected to commence today. The stock will open at 60.9 pence. Staying on the charts, just wanted to update you as well on another company reporting earnings this morning, Page Group. The company has suffered all sorts of setbacks in the last year or so because of thinning margins and people not moving in work that much. Those that are moving are in temporary roles. Operating profit down 39% to 118 million. Fee earner headcount decreased by 15.7%. Cash position down from 131.5 million down to 90.1 million. Final dividend up 4.5%. That's a show of bravado so far as I'm concerned. I'm not quite sure where they're getting the money from for that, but investors have been rewarded for holding in there. The stock will open at 457.1 pence. I suspect this could possibly be an opportunity to sell this. If you are short on this, your stop goes at 60 or 61 with a view to taking this stock lower at the start of today's session. So again, staying on the charts, just want to update you as well on what's happening with Lufthansa. Lufthansa is traded on the German DAX. There's the stock today. Worth looking at this at opening at 7.06. It saw an operating profit of 2.7 billion euros for 2023, as expected, but costly labour disputes have seen its operating margins down 7.6%, a goal of 8%. The impact of strikes and a drop in logistics profits will lead to a higher expected operating loss at the company, according to the statement this morning, in the first quarter, offsetting strong post-COVID travel demand. I think this is another stock that could well see some losses at the start of today's trade. Another reason, I guess, why the DAX is on the way down. Now, three stocks to watch when trade gets underway later on today. In fact, ahead of the close tonight, where we see Gap reporting earnings after the bell this evening. The street anticipating the group to post quarterly earnings of 20 cents a share, which would be a year-over-year increase of 126.7%. Revenues expected to decrease by 0.7% year-on-year to 4.21 billion. Analysts' sales expectations match the group's own forecast. Now, look at the share price chart. 3 months ago, you saw this big gap open up here. The stock jumped 30% on better than expected top and bottom lines, mainly due to the solid performance of its Old Navy brand. In the fourth quarter, again, Gap is expected to have relied on Old Navy sales. It's the only business in the Gap portfolio to have been able to keep its store count stable and footfall stable. The stock will open at 19.05. It's not an all-session stock. awaiting those earnings after the closing bell this evening. Before the market opens today, we've got Costco coming through with numbers for the fourth quarter. Analysts saying earnings of $3.62 and revenues of revenues of $59.11 billion. That would be a noticeable improvement on last year's figure at $54.24 billion. Let's take a look at what's happening with the share price chart for Costco, because we've just recently seen an all-time record high. This yesterday intraday to $775.08, holding on to pretty much all those gains at the close of yesterday's session. Number of customers that enters the group's warehouses up. 3 months ago, Costco sales rose 3.8%, a performance due to a 4.7% increase in the number of customers. And we've seen this stock move up and again, and to that record high that we saw intraday yesterday. Again, after the market closes tonight, we've got numbers out from Broadcom. This is fiscal first quarter numbers. The semiconductor company is expected to post earnings of $10.40 a share for the business, compared to $10.33 this time last year. Revenue expected to leap from just under $9 billion last year to $11.75 billion. Looking at the share price chart again, not too far away from an all-time record high. This red dotted line indicates that record high at $143.76. The stock will open today at $134.984. 3 months ago, Broadcom's quarterly revenue beat forecasts, boosted by investment in network connectivity for, yep, you guessed it, artificial intelligence. And that could well be the watchword to watch out for this evening when that stock comes through with earnings as well. That's it for our look at some of the corporates. Just a quick update on where we are in terms of oil. We've already covered the price of gold today. I want to take a look at what's happening with US crude ahead of what we saw yesterday for those inventories. Just a quick look at this chart. We are trading at the top of yesterday's closing point of the candle. A lot of upside in yesterday's session on expectations. We could well see increased demand with the US possibly on this soft landing. We are opening today a little changed on yesterday's close at 78.65. Yesterday, we saw those EIA crude oil inventories rising for a sixth week in a row by a margin of 1.4 million barrels, according to the EIA. And that's lower than what analysts had forecast, as refining rates picked up sharply. Gasoline inventories and distillates also on the way down. That's it. A lot of stocks to watch out for at the start of today's European session. Here in the UK, once again, Virgin Money in amongst those expected to rise some 50% at the start of today's trade. There's no other offers in the bag for the business, so I guess this will all go through. Nationwide absorbing Virgin Money into its business, which of course is a mutual, so it'll take Virgin Money off market. And also awaiting the opening trades for some of those stocks to watch out for today. Potential downside possibly for Page Group and also Aviva out as well. ITV. We're back at 10:30 for Charting the Markets.